Big banks are now facing billions of dollars in FDIC fees to replenish the deposit insurance fund. But that is not the biggest worry on the mind of bank CEOs. No, the biggest worry right now is that their bank's name will be featured in a news headline. Because it seems as though if a bank's name appears in a news headline at this moment, they are almost certain to fail. Just ask the people who worked at First Republic, which was the most recent bank to fail, or the people at PacWest, who are the subject of the most recent run on a bank thanks to a Bloomberg article that was released at the beginning of the month. But by the time you watch this, PacWest could be a thing of the past, and some other bank could be the next SVB. And the unfortunate reality is that the bank crisis won't be over as long as interest rates stay high. As a result, you need to know which banks are the safest to deal with and how to protect your money, which obviously means buying physical gold. Just kidding. Don't do that. So in this video, we're going to talk about the ongoing bank crisis. We're going to discuss the safest banks in North America, and we're going to talk about how to keep your money safe. So at the end of this video, I'm going to give you some really simple tips so that if your bank fails, you aren't brought down with it. But before we get into it, my name is Nolan Mathias, and if you want to thrive financially, this is the place for you. So do me a favor, hit the subscribe button. It really helps me out with the YouTube algorithm and allows me to make more videos like this for you for free. Okay, so let's discuss the banking crisis. And like I said in the intro, by the time you watch this, PacWest could be a thing of the past, and there could be some brand new bank that is the feature of headline news about how it's failing. But that doesn't change the validity of the information in this video, because this video is going to be all about how to protect yourself in a banking crisis. And we know all about this because this has happened before. We've seen banks fail in the past, but not quite to this magnitude. In fact, if you take a look at this recent article from the New York Times, the bank failures of 2023 exceed the value of the bank failures in 2008. Now, this is a huge stat, because just 3 bank failures are now exceeding the total bank failures of the financial crisis, which in 2008 was 25 banks alone. So the problems here are significantly worse than those faced during the financial crisis, at least from a bank failure point of view. And that's because we're seeing more and more runs on regional lenders, smaller lenders that don't have the capacity to make up for a negative news headline. And even though the FDIC and the Federal Reserve has ensured consumers that they will be protected, it seems like if one of these regional banks ends up on Bloomberg or CNN or CNBC, they're almost destined to fail. There is going to be a bank run as a result of the fear that comes along with those types of news articles. So even with all the assurances of the Federal Reserve, even with all the assurances of the FDIC, one bad headline can break a bank pretty fast right now. And this is mostly affecting smaller banks. So as you can see from this graph, you've got banks like Zions, Western Alliance, and PacWest that have gone down significantly in value as a result of some of the negative headlines that have come out in the recent past. And of course, you've got First Republic that failed in spectacular fashion almost overnight after the FDIC stepped in and took it over. And if this chart represented the first lesson of this video, it is the fact that if you're an investor in a small bank, you probably have the most risk right now. Because for the most part, most people's deposits are going to be insured. However, it's the investors that get wiped out when a bank fails. So if you're worried about bank failures and you're investing in small regional banks, or even larger banks for that matter, the best thing you can do is diversify your bank holdings. And you can either do that through an ETF that tracks the whole banking sector, or by splitting up your holdings between multiple banks instead of just one. Because if something like this happens, which is an article from May 3rd, that talked about PacWest weighing strategic options, it could be catastrophic for the bank, not only from a share value perspective, but also from a deposits perspective. Because after this article was released, within days, PacWest deposits dropped 9.5%. So one tiny little article in Bloomberg led to a 10% reductions in the deposits at PacWest, which, like I've said, can be catastrophic, especially for a small bank. Now, what's interesting is that we have all of these smaller banks failing and the FDIC organizing purchases by bigger banks. But at the same time, we see regulators in the US having concerns about existing purchase agreements from big banks to purchase these smaller banks. In fact, the TD purchase of First Horizon was recently scuttled out of concerns about TD's anti-money laundering controls. Now, this was the headline. What it seems like is that the real reason why this deal was scuttled was because TD, obviously seeing what was happening in the US banking sector, no longer wanted to pay the price that they agreed to pay almost a year ago and found a few ways out. But the reason why the regulator was taking so long to approve the purchase was apparently because of concerns about TD's anti-money laundering rules. or more precisely, practices. Now, this seems to be a thing that comes up frequently with the regulators in the US when they're looking at banking purchases. The thing that is almost always cited as a major problem or a major hurdle is anti-money laundering practices. So the reality here is that this probably wasn't an issue for TD Bank, but the delays caused by the regulator have pretty much collapsed this deal, having a significant impact on the value of both TD shares in Canada and the US, as well as First Horizon's value. And obviously on top of that, it has repercussions for the entire banking sector, as a collapsed deal just adds to the growing lack of confidence. So the question then becomes, how do I know if my bank is safe, or if I'm looking for a new bank, how do I find the safest banks? And there's some really interesting places that you can look here. First and foremost, this chart is just one that pops out for me every single time I see it. It's from a website called Visual Capitalist, and what it shows is the top US banks by uninsured deposits. And as you can see, some of these banks no longer exist. First Republic Bank is obviously long gone, Silicon Valley Bank is long gone, and Signature Bank is long gone. And well, I say long gone, they may be operating under their old names, but they've been sold to other organizations. But why this chart is so interesting is not because it is a predictor of future banks that are about to fail. It's not. However, it does represent some of the things that you need to watch out for when you're assessing the security of your bank, and specifically the amount of uninsured deposits by the size of the bank. And if you take a look here, what you're looking for is you're looking for an outsized amount of uninsured deposits relative to the size of the bank. So on the right-hand side, you can see the total assets of the banks, and the bar chart is obviously the amount of uninsured deposits. So if you've got banking with one of these smaller banks that has a significant amount of uninsured deposits, that could be a sign that trouble is coming. Now, it's not necessarily a sign that trouble's coming, but it could be. And where you probably don't have to worry is where you see large amounts of uninsured deposits with a large number of assets. So places like Citibank, places like JP Morgan, and places like US Bank. But to go one step further, there's some really great information on the interwebs about which banks are the safest. This particular chart comes from creditdonkey.com. Now, I know nothing about CreditDonkey, but I took a look at their safest banks in the US list, and it seems to be very, very well done. It covers things like the size of the bank, the amount of uninsured deposits, as well as several other factors about the safety of individual banks. And this is their list, and it seems to coincide with some of the other lists that are available on the internet. Now, there's also Global Finance's list of the world's safest banks. But if you're in the US, you're probably not going to find a lot of names that you recognize on this list, because it isn't until you get to the 34th spot that you see a US bank show up. And it's a bank called Agribank. It's not one of the big US banks, it's a smaller regional lender, and from there's only 3 other banks in the US that make this list, most of which are not household names, which may say something about the US banking sector, but it probably doesn't say a lot. Now, just so you know, how Global Finance magazine measures the safety of banks worldwide is based on their ratings from credit rating agencies like Moody's and Standard & Poor's. So this list is largely based on the ratings of other rating agencies. But if you want to see who they list as the safest banks in North America, they do have this broken out by regions. And as you can see, the top 6 banks in North America are Canadian banks, followed by 4 US banks, which happen to not be the biggest banks in the US. Now, as far as making sure your bank is safe, it probably doesn't matter what CreditDonkey says or Global Finance magazine says about how safe your bank is. And it probably doesn't make sense to move your money from your existing institution to an institution that appears on those lists, because you have to remember that your deposits and your money are federally insured up to a certain limit. And as long as you don't exceed that limit at your particular bank, the chances of you losing all of your money are pretty much slim to none. And it's important for you to know exactly how your institution is insured and what the limits are. So if you bank at a credit union versus a bank, or you bank in the US or Canada, make sure you look up what the insurance limits are at your institution. And pretty much every insurance agency has a list of institutions that are insured by that agency. So all you do is you go in, you click the drop-down list, and you figure out if your bank is on that list or your credit union is on that list. And also keep in mind that if you have investments with an online brokerage or a brokerage at your bank, those investments are also insured typically under a different type of insurance. And you're often insured for those to a greater amount. But if you want to have some further reassurances, there's some simple things you can do. So first and foremost, it's all about diversification, and not just your investments, but also your banks. I recommend to everybody that they have relationships with at least 2 banks, if not more. The reason why is simple. 1, if that bank fails, you have a place to move your money to quickly. 2, if your bank fails, you're going to have money at the other bank, so you have access to it if for whatever reason you get locked out of access for a couple of days. And 3, it always makes sense to have multiple banking relationships so that when you're looking for a product like a mortgage or a loan or maybe an investment account, you can go to both banks and then use the fact that you have multiple relationships in order to leverage them for a better deal. Because if you've only got a banking relationship with one organization, and keep in mind they can often see this from your credit bureau, the chances of them giving you a better deal are slim to none. Because when they know that you're unlikely to go elsewhere, they're probably not going to give you the best deal that they can. Now, on top of that, diversifying your assets is a huge part of protecting yourself from bank failures, especially when we're in a bank crisis. And obviously the place to start here is to see if you own any individual bank stocks. And if you do, you probably want to diversify, either by splitting it up into multiple banking organizations or buying something like an ETF that covers the entire banking sector. Then on top of that, because we all know what a banking crisis can do to the global economy, you also want to make sure that you're diversified on your assets. So you probably want to have a little bit of gold and silver in your portfolio. Whether it's physical or not is up to you. You can watch some of my other videos, which I'll link to at the end, that talk about why maybe physical isn't the best idea. But hey, if you think this whole thing is going to hell in a handbasket and you're going to need some yellow chips to be able to trade for food and water, then hey, do you buy some physical gold and silver. But you also probably want to have some money in the S&P 500, some money in bonds, and a little bit of cash just in case there's some buying opportunities that come up in the near future. And there might just be some buying opportunities, especially in the banking sector. And you could probably take advantage of that right now by buying something like an ETF that tracks the US banking sector or the global banking sector. Because right now there's a lot of fear in the market, a lot of volatility. And as Warren Buffett says, the best time to buy is when people are fearful. And I'd say people are pretty fearful right now. So the moral of the story here is if you don't have deposits that exceed insurance limits, you're probably okay. But keep in mind, you want to know exactly how your banking institution is insured. And if you do exceed the insurance limits, make sure you move your money around. On top of that, it always makes sense to have multiple banking relationships and to make sure you have a diversified portfolio. Oh, and I wouldn't go pulling my money out of the stock market anytime soon, because honestly, the minute you do that is usually when the market turns for the better. Oh, and last but not least, if you want to see that physical gold and silver video I was talking about, or a series of other ones, make sure you check out this video